Welcome everyone to the Financial Learning Corner. If this is your first time joining us, we're thrilled to have you on board. Our channel is dedicated to unraveling the complexities of the financial world, one video at a time. Today, we're diving into a topic that might seem invisible, but has a direct impact on your wallet and investments. Before we start, make sure to hit that subscribe button, share our content with your friends, and don't hesitate to leave a comment if you have any questions or thoughts. And of course, to stay up to date with all our latest videos, don't forget to click on the bell notification button. Now, let's demystify the invisible hand that's slowly but surely changing the value of your money, inflation. Ever wonder why the dollar in your pocket seems to buy less year after year? Just like an invisible hand, there's a subtle force at work here, and that force is inflation. Inflation is a term you've probably heard thrown around in the news or in financial circles. But what exactly is it? In its simplest definition, inflation represents the decrease in the purchasing power of money over time. Imagine you've got $100 today. Thanks to inflation, that $100 might only buy you $90 worth of goods next year, and perhaps even less the year after. It's like a magic trick where your money slowly disappears. Only, it's not magic, it's economics. Inflation is measured by several methods, with the most common being the Consumer Price Index, or CPI. The CPI tracks the average price of a basket of goods and services over time. If the average price goes up, that's inflation. If it goes down, that's deflation. But inflation doesn't just affect the price of your favorite chocolate bar or the cost of a movie ticket. It's a crucial economic indicator that shapes monetary policy and impacts everything from interest rates to wage growth. Why should you care about inflation? Well, if you're an investor, inflation is like a specter that haunts the economy, affecting your returns and your overall wealth. It's the silent thief that erodes the value of your investments over time. If you're not careful, it can eat away at your returns, leaving you with less than you started. So while inflation might not be something you can see or touch, its effects are very real. It's like a shadowy figure lurking in the background, subtly shaping the economic landscape. It's a crucial factor to consider when making investment decisions, as ignoring it can lead to some unpleasant surprises down the line. Indeed, inflation is the silent thief that erodes your money's purchasing power. But by understanding inflation and how it works, you can make better informed investment decisions and keep more of your hard-earned money where it belongs, in your pocket. So how does this sneaky thief called inflation affect your investments? Well, let's first think of inflation as a silent burglar. It might not break into your house, but it can certainly break into your financial security. You see, inflation erodes the real value of your assets. Imagine you have $100 tucked away under your mattress. A year later, due to inflation, that $100 might only be worth $95 in terms of what it can buy. You still have $100, but its purchasing power has been reduced. Now let's move on to investments. When you invest, you're essentially putting your money to work, expecting it to grow over time. But here's where inflation comes into play. If the rate of return on your investment is less than the rate of inflation, then the real value of your investment is actually diminishing. For instance, if you have a bond that pays a 3% annual interest and inflation is running at 2%, you're only really making a 1% gain. But if inflation jumps to 4%, then you're actually losing money in real terms, even though the nominal value of your investment remains the same. So investments aren't just about making more money, they're about outpacing inflation to preserve and grow your purchasing power. That's why it's crucial to factor in inflation when considering potential returns on your investments. But remember, inflation isn't always a bad thing for investments. It can also lead to higher returns in some cases. For instance, investments in real estate or stocks often benefit from inflation, as companies can increase prices, leading to higher profits and potentially higher stock prices. However, the key is to be aware of inflation and consider it in your investment strategy, because, like it or not, inflation is a part of the economic cycle. It's that sneaky thief that's always lurking around the corner, waiting to chip away at your investments if you aren't careful. Inflation, therefore, can be a game changer in your investment journey. Can your investments withstand the onslaught of inflation? The answer is, they can. Let's dive into the world of inflation-proof investments. There are various avenues that have the potential to not only stand up to inflation, but also to beat it. These include stocks, real estate, and inflation-protected securities. Stocks are a popular choice when it comes to inflation-proof investments. Companies often have the ability to adjust their prices to match inflation, which means their profits, and subsequently their stock prices, have the potential to rise along with inflation. So, if you're holding on to some promising stocks, they can serve as a great hedge against the eroding effects of inflation. Next, we have real estate. Similar to stocks, property values and rental rates often increase with inflation. Thus, investing in real estate can provide a tangible asset that appreciates over time, and if rented out, can generate a steady income stream that keeps pace with inflation. Lastly, let's not forget about inflation-protected securities. These are bonds that are designed to help investors fight inflation. A common example would be Treasury inflation-protected securities, or TIPS for short. The principal amount of TIPS adjusts with inflation, and the interest is based on the adjusted principal. Therefore, when inflation rises, so does the value of your TIPS investment. These investment options are not just about beating inflation. They're about providing a shield, a buffer, a hedge against the relentless march of inflation. They're about ensuring that your hard-earned money retains its purchasing power and continues to grow. However, remember that all investments come with their own set of risks and potential rewards, and it's important to carefully consider these factors and diversify your portfolio to balance out the risks. Investing smartly can help you stay ahead of inflation. Don't just save your money, make it work for you, because when it comes to inflation, the best defense is a good offense. Investing is not without risks, and inflation is just one of the many factors to consider. Let's take a moment to explore the risks associated with various investments. When it comes to stocks, there's always the possibility of a company underperforming or even going under. This can lead to significant losses, especially if you've put all your eggs in one basket. Bonds, on the other hand, carry interest rate risk. When interest rates rise, bond prices fall, which can lead to a decrease in your investment's value. Real estate investments are not immune to risk either. Property values can fluctuate, and there's the added risk of damage or loss due to natural disasters or other unforeseen circumstances. In addition, real estate can be illiquid, meaning it can be hard to sell quickly if you need cash. And let's not forget about inflation, the silent eroder of purchasing power. Inflation can chip away at your investment's real returns, making what seemed like a good return less impressive when adjusted for inflation. So how do we navigate these risks? One word: diversification. Diversification is essentially not putting all your eggs in one basket. It's spreading your investments across a variety of asset classes, stocks, bonds, real estate, and perhaps even some commodities or cryptocurrencies. This way, if one investment performs poorly, the others can help offset the loss. Diversification also helps protect against inflation. Different asset classes respond differently to inflation. Some, like stocks or real estate, can potentially offer some inflation protection, as companies may pass on higher costs to consumers, and property values and rents can increase. Remember, diversification doesn't guarantee profits or protect against all losses, but it can help spread risk and potentially improve the likelihood of achieving long-term investment goals. A well-diversified portfolio is your best defense against inflation and other investment risks. And with that, we've armed you with some key considerations for your investment journey. Stay tuned for the final scene where we'll tie everything together and leave you with some key takeaways. Inflation is a reality of the economic world, but it need not be a nightmare for your investments. As we've journeyed through this exploration of inflation and its impact on investments, we've uncovered some fascinating truths. We've seen how inflation, this invisible hand, silently but surely manipulates the value of money, and how it leaves its fingerprints on our investments. We've realized that inflation is not the villain it's often painted to be. Instead, it's a natural part of our evolving economy, a silent partner in our financial dance. It's a force that, when understood and managed effectively, can be harnessed for our financial benefit. We've delved into how inflation impacts investments, how it erodes the purchasing power of money, and how it can turn a seemingly profitable venture into a loss. We've examined how different types of investments react to inflation and the need for diversification to hedge against its effects. We've also explored the concept of inflation-proof investments. We've seen how assets like real estate, commodities, and certain types of bonds can act as a buffer against inflation. We've looked at how these investments can help preserve the value of our money and even potentially offer returns that outpace inflation. Through all this, the importance of understanding inflation and making informed investment decisions has been underscored. It's not enough to simply invest. One must invest wisely, with a keen eye on the inflationary environment. Inflation isn't just about rising prices, it's about the value of money, the power of purchasing, and the potential of investments. It's about understanding the economic landscape and making decisions that not only protect your wealth, but also grow it. And that's the crux of it all. Inflation is not a force to be feared, but rather understood and navigated. It's a reality of the economic world that, when approached with knowledge and strategy, can be turned into an ally for your financial journey. Remember, the key to successful investing is knowledge, and now you're equipped to make inflation-smart decisions. Happy investing.